Attention business owners, do you have multiple business operations running underneath one LLC? And if so, the liabilities from one of your operations could potentially spill over into your other operations and cause an epic liability catastrophe. If this happens, then you could be forced to surrender assets from all of your operations to pay off the debts and obligations of your one business operation that you own. Obviously, we don't want this to happen, and the good news is that there is something called a Series LLC that you can use to contain each of your business operations and isolate them so that they cannot harm each other in the event of a massive lawsuit or having huge debts called in. So in this video, I'm going to explain everything that you need to know about Series LLCs, including what they are, how they work, when they should be used, how to correctly structure them, and then how you can operate them to protect your business assets correctly. Without further ado, let's dive in. All right, guys, what is a Series LLC? A Series LLC is a special type of LLC in which membership assets, interests, and operations can be separated into different series. With Series LLCs, there's no limit to how many times these assets or interest or even operations can be separated into different series. Now, once the series are set up, they operate like separate entities. In fact, different series in a different LLCs can have their own bank account, their own name, set of books, and records. Also, each series can have its own managers who are in charge of running it. This is amazing. Additionally, the rights and obligations of the managers of each series can differ significantly from series to series. If each series has their own contracts, holds their own title or own real estate, that's completely fine, and each series can be sued individually. What is the purpose of a Series LLC? The purpose of a Series LLC is to put some space and boundaries between different operations or entities that are owned within your LLC, such as investment properties. Series LLCs provide liability protection for each series by itself. This means that each series in a Series LLC is shielded from the liability of the other series in the LLC. So essentially, the main point of a Series LLC is to limit risk from an LLC that has many different operations or business entities within it. So who should have a Series LLC? Series LLCs are most commonly used by business owners who own and operate multiple business entities or have different locations or operations. For example, real estate investors who have multiple properties frequently use Series LLCs. When real estate investors use Series LLCs, they often will put each property into its own series. This prevents the liabilities associated with one property from spilling over into the other properties. Now, to understand how this works, let's imagine that you're a real estate investor and you have a Series LLC with 3 rental properties, and each property is represented in one series. Now, imagine that property A is being sued. If this occurs, property A could potentially be forced to pay a significant amount of financial damages to the plaintiff. But because all 3 properties are included in one Series LLC, the liability from property A, including damages owed as a result of the lawsuit, could never spill over into properties B or property C. So it is almost like properties B and C have their own giant stone walls or moats around them, protecting them just like a medieval castle would. So just how a medieval castle might use like a large wall or a moat to keep out invaders, you can put a Series LLC around each of your business operations to keep out liabilities from one another. This type of protection is highly desirable to business owners who have multiple operations running simultaneously and who want to keep the liabilities separate, but also have all the operations under one LLC. Now that we discussed what a Series LLC is and we talked a little bit about the main benefits of having one, let's talk about how to set one up. The first thing that you're going to have to do is choose the name for this Series LLC. You'll have to include the letters LLC after it or another state-approved designation that reveals that your company is a limited liability company. After that, you'll have to approve registered agents for every state that your Series LLC will be operating in, and registered agents accept paperwork and services of process on behalf of the LLC. So the registered agent can be members of your LLC or individuals, or they could be outside individuals of the business that you have authorized. After this step, the next thing that you will have to do is decide on the management of your LLC. Once this is decided, you can move forward and file the Articles of Organization, which are also commonly referred to as the Certificate of Formation. You will also have to file this document with your state's Secretary of State and pay any fees associated with this filing as well. The forms that you have to fill out and the fees that you have to pay vary from state to state. Your Articles of Organization should include a provision that clearly states that this is a Series LLC. Some states require each series in the Series LLC to register individually with that state, but many do not. not. Next, you will need to get your EIN number for your Series LLC and for each series that is in it. You can easily do this by applying for them on the IRS's website or by filing Form SS4 with the IRS. After that, you will have to create the operating agreement for your Series LLC. This operating agreement will include ownership percentages, responsibilities for each member, rules for buyouts, and much more. You should also involve an attorney at this stage if possible for legal guidance. You will also have the option to create a separate operating agreement for each series in your Series LLC. And this is something that you should strongly consider, and you should take your time talking to an attorney to get advice for this. You might also want to consult a tax professional for their opinion as well. Once all of the details of your Series LLC are sorted out, you will also have to set up your separate bank accounts for your Series LLC and for each series inside. This is a part of the process of keeping the operation separate. In order to make sure that all of your series can operate legally, you also need to make sure that you obtain all the relevant business licenses and permits. How do you structure a Series LLC? The first thing that you should do when setting up your Series LLC is to create a master LLC. Now, what a master LLC is, or a parent LLC, is the primary LLC that will sit at the top of your Series LLC. The master LLC is responsible for paying taxes on behalf of the full series. Master LLC is also the entity that is registered with the state and has the ability to designate protected series. Most people who choose to set up a Series LLC only use the parent LLC to take care of paperwork, file taxes, and designate Series LLCs. They usually do not hold assets in the master LLC, but even if you have a master LLC that holds assets, it's still protected from the liabilities of the other series in your Series LLC that do hold assets. So, step number one for structuring your Series LLC is to create the parent LLC or the master LLC that will act as a sort of vehicle for filing taxes, filing paperwork with the state, and designating the other series. Step number two is to create a management series. The management series is usually the first protected series that is designated by the master LLC. Management series is responsible for running the business and overseeing the entire operation. And step number three is to create Series 2. Series 2 is the first series where you'll actually start adding business assets. Many business owners choose to put their most important business operations or assets into this series. After you have created Series 2, you can create as many additional series as you need in order to protect your business from the liabilities of each operation, asset, or property that you have. And this is how you structure a Series LLC. How do you maintain a Series LLC? Even if you structure your Series LLCs well and you set it up correctly, it is still critically important to maintain it. This means that keeping separate and accurate books for all the different series and making sure all of your business assets are assigned to one of the series. If you have business assets that are not properly assigned to one of the series in your Series LLC, then they could potentially be vulnerable to seizure in the event of a lawsuit against your company. Also, if creditors discover that some of the assets are not properly allocated into one of your series, then it could motivate them to try to go after some or all of the series. Look for these as the vulnerabilities with Series LLCs. In other words, it's not enough to just have a Series LLC, guys. You also need to use it correctly. And due to the advanced structure of Series LLCs, many business owners who use them often hire accountants, tax professionals, bookkeepers, and business managers to help them run their Series LLCs correctly. Taking this approach can be highly beneficial. Now, I get asked, do all states recognize Series LLCs? Not all states do. And LLCs was first accepted and made popular in the state of Delaware, which is a very pro-business and tax-friendly state. It is for this reason that many people choose to incorporate their businesses or form their LLCs in Delaware. But Delaware is not the only state that recognizes and allows Series LLCs. All of the following states and/or U.S. territories formally recognize and allow Series LLCs in addition to Delaware. Number 1, Alabama. Number 2, Arkansas. Number 3, Illinois. Number 4, Indiana. Number 5, Iowa. Number 6, Kansas. Number 7, Missouri. Number 8, Montana. Number 9, Nevada. Number 10, North Dakota. Number 11, Oklahoma. Number 12, Puerto Rico. Number 13, Tennessee. Number 14, Texas. Number 15, Utah. Number 16, Virginia. Number 17, Washington. Number 18, Wyoming. So, as of right now, the only state that has officially forbidden the formation of Series LLCs is California. Most states actually do not take an official position on them. If you want to form a Series LLC but you do not live in a state that allows it, then you can form an out-of-state Series LLC. The most popular states to form out-of-state Series LLCs are Delaware, Nevada, and Texas. However, you do not necessarily have to choose one of these states to form your Series LLC in. You should speak to a tax professional and get advice, get guidance about which state would be the best advantageous place to form your LLC out of state. How are Series LLCs taxed? The IRS does not provide any specific status statuses for Series LLCs. So Series LLCs are essentially treated like normal LLCs by the IRS. So while each series in the Series LLC acts like a separate entity for governing purposes and liability, the overall Series LLC is treated as one entity for tax purposes. This is the incredible advantage of Series LLCs because it prevents you from having to file individual tax returns for each individual single member LLC you may have or multi-member LLC you may have. Therefore, no matter how many series are included in the Series LLC, the Series LLC just has to submit one tax return. Taxpayers, you should also know that Series LLCs are still considered pass-through entities. And even though they're often larger in size and scale compared to standard LLCs and can look more like corporations with subsidiaries, a pass-through entity is an entity in which the taxes pass through the business onto the owner of the business. So with a Series LLC, you will not have to deal with double taxation. Who should not form a Series LLC? Really, anyone who has a business that just has one location or one primary business operation does not really need to form a Series LLC. Let's say that you own a sporting goods store, for example, and you just have one physical store location in one state. In this particular case, it wouldn't really make sense for you to form a Series LLC because there is no risk of the liabilities of your sporting goods store spilling over into any of your other business assets or entities. However, let's say that you owned a sporting goods company and you had two different locations, one that sold basketball equipment and one that sold soccer equipment. In this case, it might make sense for you to set up a Series LLC and form a protected series for each store location. That way, if there were any lawsuits or major claims against either one of the store locations, they cannot spill over to the other store location. Now, can you switch a traditional LLC to a Series LLC? The answer is yes. It's possible to upgrade your traditional LLC to a Series LLC. However, the process of switching can vary and it depends on the state that you're in. In order to make the switch, the first thing that you should do is contact your Secretary of State's office to see what the requirements are for switching. You can also look online. This information is typically on the Secretary of State's website. You might be required to make an amendment to your articles of formation or your operating agreement or both of these documents. There's also a good chance that you'll have to pay a small little fee to submit this document. After you have gone through the process of making the change, make sure that you verify with your state's Secretary of State office that the change has officially been accepted. So in other words, don't just assume that you successfully changed the status of your company just because you filled out some paperwork and submitted it. The last thing that you want is to be sued and then find out that you didn't have all of your LLCs properly structured into the series that you thought you had structured them into. Is it worth it to get a Series LLC? Obviously, there is no right answer to this question, but for many people, it might make sense to have a Series LLC if you're going into real estate. My overall opinion of Series LLCs is that they can be extremely beneficial for people with businesses that have a lot of moving parts. For example, if you are a real estate investor with a lot of different properties, it can definitely make a ton of sense to get a Series LLC and to create a protected series for each property. Getting a Series LLC can make it much simpler to do your taxes for your business, and it is also an excellent safeguard to make sure that the risk associated with one of your businesses does not spill over into the other businesses. If you do not have this level of protection, then this could be very valuable for you and is part of the reason why you should look to schedule a call with our tax strategy team. So yes, Series LLCs can be an excellent idea for many people, but if you have any questions on whether or not a Series LLC is a good idea for your business, then you should definitely consult with a tax professional. In fact, you can speak to a member on my team by clicking on the link in the description below and setting up an appointment. Thank you so much for watching this video, guys, and I hope that you found it to be helpful, and I'll see you in the next video. Cheers.